What's going on, traders? Welcome to the channel. My name's John. That's Groot. We trade options here. So if you clicked on the video and you've seen some of the videos and you haven't subscribed yet, that is the universe telling you it's time to take charge of your future. We trade options here for weekly, monthly incomes. Think of them as like little dividends that you get on a weekly, monthly basis. And then from there, we reinvest it to build more wealth. The first bucket, we kind of use that to grow into bigger options income trade. And the second bucket is going to be like your safer bets for long-term growth. Kind of like indexes, index funds, maybe even something like a Tesla or so. And then the last bucket is going to be for kind of a small bets into really big, riskier, kind of outsized return plays that can give you 10, 20, 100x, who knows. I missed GameStop, just to let you know. But I guess so did many others. If you have GameStop, let me know what you did. I'm curious what your cost basis is, because that is pretty crazy and it's fun to watch. I enjoy this right now. So we got two trades to cover. One, I closed out AMD quick. I literally opened it with the last 2 minutes of trading yesterday, closed it right in the morning this morning, like first minute of open. So it took me like 3 minutes to do this trade and make about $300, which was great. The second one I just opened today, that's Palantir, and I'll cover that in more depth, but basically these are both covered call type of formations. And so let's just get into the quick one here. I'll explain the earnings trade with AMD. With AMD, it was an earnings trade. They announced earnings after close yesterday, and it was a covered call. So basically you have 100 shares. We're going to actually sell a call against those 100 shares above where it's trading now. So essentially what I did, AMD was trading around $90 or so, and I decided to sell the 98 strike in the expectation that we don't exceed that level. So I sold that call at the 98 strike level for $340. So $340 you'll see on the screen. And then literally in the morning, we had an IV crush because we did not pass that level. So what happened is all that inflated value of the options contract just got destroyed. Also, I guess it helps that AMD did drop a little bit. But what that did is that gave me the opportunity to buy, to close this position at 50 cents, which times 100, that translates to $50. And I made a cool 300 bucks in that trade. I think it was 290. So to give you an idea, as we're looking at this daily chart here, we had talked on a previous video that a key level I'm watching is around that $89 level. It's like $88.75 or so. And you will see we literally closed on that, which is crazy. So this is a key area we need to watch. I am not too worried that I'm still holding on to my 100 shares. A few things that'll happen if we start dropping more. I'm planning on selling a covered call again on this stock. Unfortunately, it probably won't be for that $300 or so at the price levels I'm looking at in terms of my risk. However, when I do, I'll let you know. Usually it might be about half that, maybe in the hundreds, $150 level of premium until we have earnings again. As you see here, if we keep dropping in AMD, I will be buying significantly. I like this stock anywhere near this double bottom that you'll see at the 73 price level. So just keep that in mind. But you as traders, you need to do your own research. This for me is me journaling my risk, what I'm comfortable with, and it's for educational purposes only. I want you to kind of see almost like a journal of the way I think, the trades I want to make, and I hope it helps you out. So to better illustrate that IV crush, you are going to want to look in Tasty Works here. The IV crush from AMD can be illustrated as follows. I'm going to look at the implied volatility. You'll see here on this lower section it says IVR, and this was trading yesterday at a very inflated premium. So you can see 126, you know, we ended up about 29 to 30 on the implied volatility, and then as earnings came out, we got crushed. It went really low to about the 15 level on the IV rank, and now we're closing somewhere around 22.9. So you'll see here where my mouse is in the top area. So that is giving you an illustration of how the options will inflate in value. and then after a binary event, they kind of inflate leading up to the event. And then as it happens, they just get crushed significantly. So anyone who is buying these at, naked calls, or anyone Wall Street bets, maybe someone who doesn't have a lot of experience, you need to be aware of that, because that premium and volatility will decay fast if something like this happens, and you'll be left kind of holding the bag, not really knowing what is going on. Okay, next is Palantir, and Palantir has had some pretty good moves lately. You'll see with Palantir, the thing that speaks out to me the most is the volatility has gone bonkers. They had a recent event, I think it was like a software demo day, and the stock went pretty high. I think we went to like 45 or 50 bucks and then started to drop. And you can see, I mean, we hit a high IVR of 120, which is wild. And so we're at 103 right now. And so I took on this position. I'll explain it a little better to you. Anyone who's seen some of my older videos, I've been holding on to this call right here for a long time. It's the January 21 of 2022. So I got a year out on this call. It's the 12.5 strike. And I paid this cost here of $580. So that's a pretty good price. To give it to you in a better way, this is called a poor man's covered call, meaning this call is in the money, and that's like my 100 share sort of default or equivalent. And then I'm actually selling a call against that right here at the top. So to give you an idea, if I had purchased these shares outright, 100 shares, 12.5, that would have been 1,250. I'm only actually using up $580 instead of that. So it is a little bit cost efficient at the right time. I got lucky that Palantir was doing well. Ultimately, as always, I probably could have bought, 10 of these instead. But I bought one at least, and we're going from there. My cost basis has been lowered significantly in Palantir. I've already done a few of these now, but the premium was just too juicy. I sold this thing today at $390, the 50 call strike, and this is for the February 19th monthly contract expiration date. So not too bad. So far, we're at $30 of profit, and my expectation is that Palantir maybe hovers around here for a little bit, or if there's market weakness, it may go lower. And the market is looking a little frothy in some ways. I guess the thing that is interesting to me is everyone's crying in one way or another. Everyone's either really, really bullish, or if you go on CNBC, you're going to see everyone who is talking about bubbles and so on and so forth. But when we look at the charts, how about we go off of there? We're currently in no man's land, which is an interesting place to be. So we are below this resistance line that used to be support, and we are now still above this 360 level in the SPY, which is a good support level too. So keep that in mind. But the bigger thing I look at is the VIX, and this is the volatility index. We've talked about this a lot. This is probably one of my favorite indicators, honestly, because you're going to see from all of 2020, this 20 level has held significantly on VIX. And you can see today we shot off crazy high on the VIX. And so all volatility has picked up in the market. Generally, when the VIX goes higher, that is significant in terms of lower price action in the overall markets. You can see February and March of 2020 with the coronavirus correction, we shot up big. So that is a key thing to look at. In each of these spikes, we had big drops in the market. None as big as last year in the correction. So keep that in mind. That is next step. We need to find out where we're going, and that is why it's important to keep your positions really small, because when things start to inflate like this, it gives you firepower to start putting on more higher probability positions. And that's where I'm going to be at. I'm going to be a little bit patient this week with earnings to see where everything falls and then go from there. I found it interesting that Apple announced $111 billion revenue, I believe it was, which is insane, and yet it dropped. So that's a weird thing to see in the stock price. I expect it to go much higher. So you can't win them all, and I haven't put on a trade in that, just for disclosure to you, but I'll keep my eyes out. It's a good looking stock. I like it for the year. So we'll see. Appreciate you stopping by. Don't forget to subscribe. Backwards E. Don't make Groot mad. Thank you again, and I will see you on the next one. Peace. Bye bye.